On to the money show today, we're going to be focusing on the gold prices as gold prices are seen to be soaring and they continue to hover around the record levels of 1992. Yes, that's correct. Almost a three-decade high is what we are seeing on the gold prices, very near to its record high levels, and the pressure in the commodity prices are seen to be inching up, mounting ahead of the US Fed meet. Additionally, the Israel-Hamas, the kind of a war front and the kind of a pressure that we have seen and the global uncertainties, all these factors are definitely putting pressure on the gold prices. And not just that, when we talk on the domestic front as well, so amid the India's festive boom, how will the high prices impact the spending ahead of the Diwali? We will try to find an answer to that. So going ahead, what should be your expectation on the gold prices? Sitting in India, what should be your strategy for the gold as well? So we will discuss all of this and more with Kunal Shah, Head of Research at Nirmal Bang Securities, as well as G Chandrashekhar, who is a commodity expert. With this, let me welcome both of them. And we are being joined by G Chandrashekhar. Thank you so much, gentlemen, for both of your time. And Mr. Chandrashekhar, I would like to come to you because the gold prices are really near to its 1992 odd levels. So going ahead, do you believe that there's more leg room to this rally in the gold prices? How should one see the outlook?
Let me start by saying over the last 25 years, I found gold to be a lucky commodity. Okay? Whenever gold price declines, something or the other would happen, including geopolitical developments, that would actually prop gold prices up. And there is a certain correlation. Okay, and gold prices, you can't keep gold prices down for a long time, although they will decline from time to time. There is no doubt at all. At the moment, I find that tug of war between geopolitical concerns on the one hand and the headwind for gold, which is a strong dollar, a robust US economy, higher bond yields, etc. But at this point of time, and in the last probably 2 weeks or so, it is a geopolitical instability which is very substantially driven gold prices higher. As a result of which, there is now what is called a war premium on gold prices, possibly $100 per ounce war premium on gold prices. If you ask me whether going forward what is likely to happen, I think it's in my view, it's rather risky at this point of time to talk about any outlook for gold because gold is actually at the crossroads. Okay, it's at a crossroads simply because its future price trend is going to very substantially be dependent on the outcome of the war, or the fate of the war, or the future trajectory of the war. What if this war, Israel Hamas were to halt tomorrow, ceasefire? There'll be a big collapse. Okay. What if this war were to escalate? Iran is pulled in, etc., etc. All that. If then that'll give gold further boost. Therefore, I think it's we will then be betting on the trajectory of the war rather than the trajectory of gold prices. And therefore, I think we are at a crossroads. In my view, I'm not a trader. I don't hold any trading position, nor do I advise people. But I would think extraordinary caution needs to be exercised at this point of time by those investors in gold who expect a very substantial jump in prices. It may not happen. But we don't know. On the other hand, you have the FOMC meeting today and tomorrow. We don't know what the outcome is going to be. US economy is quite robust. The GDP third quarter numbers are very, very positive. Inflation is still not anywhere close to the Fed's tolerance level. I personally will not be surprised if there is a further 25 basis point increase in interest rates I'm not saying it will happen, but if it were to happen, it may happen. then that should again provide or pull gold prices down a little. But war is the most critical event at this point of time, which will crucially determine the future trajectory of gold.
Okay. Thank you so much, Mr. Chandrasekhar, for putting into perspective that what are the fundamental factors that are at play. But talking about the technical front, Kunal, coming to you, you do track gold on the technical front, and gold is actually considered to be a safe haven. But given the move, do you believe that it's still safe to go ahead and invest in the gold, or rather one can wait for some blip on the price front and then go ahead with the investment or trading opportunities?
I myself look into the fundamental aspect of the
Okay.
gold, and fundamentally, gold
Understand.
is looking very strong. Not just geopolitical concerns, which makes me believe that gold prices are going to go up. There are more reasons for us to remain bullish on gold, and the biggest reason for us to remain bullish on gold is the inflated level of balance sheet of Western central banks. So you see, Fed's balance sheet have expanded from 4 trillion to 9, and right now hovering at $8 trillion. Before COVID, it was just $4 trillion. So these levels of balance sheet, we are not going to see the balance sheet reduction to the tune of $4 trillion or $3 trillion being pulled back by Federal Reserve in the next 1.5, 2 years. Considering the size of the balance sheet of the global central banks, and especially developed ones, US, UK, Europe, Japan, uh, gold prices are highly undervalued right now. So I think these levels of 18, 1900 is something, we are not going to see for a long period of time. Gold is about to take off and go into another trajectory. And I'm not expecting, we are not going to see gold at $1,800 in next 2 to 3 years. We are going much, much, much higher than where we are right now. Considering the way the monetary expansion have taken place, after that, the way central banks have been buying gold as a diversification of their reserves, no central banks are buying US Treasury, which was a trend back in 2000 to 2012, 15. In 15, 20 years, people have been, ever since 1980 till 2005, all the central banks have been buying US Treasuries. Nobody's buying US Treasuries. Everyone is selling US Treasury. And each and every central bank is buying gold. So this year also, we are going to see 850 to 900 tons of gold being bought by central banks versus the 10-year average of 400 tons. So this all points to a scenario that gold is heading towards 24, 23, $2,400 in next 1.5 years duration. And I'm talking about 15 to 20% jump from here. And I'm expecting a very big bull run in gold in next 1.5, 2 years.
Thanks for your take as well. Expecting a big bull run in the gold and expecting almost a 20% return in the next 1 year. But Mr. Chandrasekhar, a very interesting report coming in from the World Gold Council, where they say that the rise in the gold prices could really hit the demand in markets like India, wherein because of the festive season, people might take their hand back in going ahead to make more purchases. But on the other hand, we have not just the festivity, but also the wedding season kicking in. Do you really believe that this could actually impact the demand in India? And what will be your advice for all the gold, prospective gold buyers for the festive as well as the wedding season?
I've consistently believed, and I've written and commented on this for many years, that Indian market is very highly price conscious. All the time there is a biting point. There is a point where the price will start to bite demand. And we are at a juncture where gold very broadly appears unaffordable for a majority of the population, particularly for the rural population. You and I may be able to afford gold even at 60 or 62,000 rupees per 10 grams. But honestly speaking, you and I don't represent India. India is there in the interiors, in the villages, and which is where 60 to 70% of the gold demand comes from. For rural areas, have not experienced any substantial income growth in the last 2 or 3 years. And this year, 22, 23, 24 is even worse with absolutely suboptimal rainfall and kharif production falling well below the target, and crop damage, and a looming threat of another risk, weather risk to the upcoming Rabi crops. So rural areas are not doing well. But because you have the festival season, you have the wedding season, there obviously will be some demand. There is no doubt at all. But even that demand, particularly, will be driven by a budget. And therefore, people will have a budget. 5 lakh rupees is what I'll spend to buy gold. Okay. And therefore, what, or 6 lakh rupees, what 6 lakh rupees will buy for them? The in relation to what it was, say, 2 years ago, 5 years ago, the volumes will be much less than it was, say 5 years ago. And therefore, gold demand will begin to shrink. There is, I can perceive very clearly, the market participants also know very clearly, there is demand destruction at higher prices. But if you look at the history of the last, say, 7-8 years, Indian consumers are getting used to higher and higher prices. There was a point of time when 30,000 rupees, 35,000 rupees for 10 gram was a biting point. It became 40, 45, 50,000. Now, possibly, if this trend continues, it could even 60,000 rupees for 10 grams can become a kind of acceptable level of gold purchases. But what is important is, and many of the analysts ignore the fact that the physical demand plays a very significant role in driving gold prices, quite apart from the currency, apart from geopolitics, and anything, central bank purchases, all that. But physical demand really plays a big role, but it does not get the kind of importance that it deserves. And my belief is that this year, physical demand has been quite less than robust, has been relatively weak. And 2024, at least as far as India is concerned, I don't see any substantial pickup in gold physical demand to pick up substantially even in 2024, primarily because of slowing economic growth, a very limited agriculture growth, etc., etc. And therefore, while international prices may rise for whatever reason, it will translate into higher prices for India, but at even higher prices above 60,000, say 65,000 or 70,000, there'll be even more demand destruction that India will witness. Therefore, I think it's an interplay which has to pan out, but I am unfortunately not ready to accept the proposition that gold prices will jump maybe 10%, 15%, say in the next 2 years. I think even to talk about 2 months or 3 months or even 6 months ahead itself is a terribly risky proposition. What talk about 2 years from now? I think what is also important, I want to tell your viewers that I would not like your viewers to get carried away by extreme views. This is the first point. And we have seen all this in the past. It's not the first time. And second one, I would also advise, if you are an investor, if you have a risk capital to invest, as far as possible, don't take far forward position. Track the current events, track the current development, take a forward view, but not a far forward view of the gold market, because finally, at this point of time, it is war which is a crucial driver of global gold prices, and we don't know which direction the war is going to go.
Okay. Absolutely. Absolutely, Mr. Chandrasekhar. Totally take your point on all of those fronts and your take on the demand as well. Definitely in the rural area, the excitement of having a gold is much higher than at least what I witnessed sitting in the urban front. But 60,000, 70,000 people end up accepting that. But Kunal, lastly, before I wrap this discussion up, since you are quite bullish on the gold prices going ahead, and as a retail participant, experts always advise to go ahead and make a purchase whenever they get an opportunity in a dip. But that's actually easier said than done, because when prices continue to fall for maybe 2 to 3 days in a trot, the expectations get higher that maybe there could be some more price falls and maybe let's wait buy. So any levels that you are tracking that where people can go ahead and make some purchases, and how to go about it, what staggered manner of strategy they should adopt, anything on that front?
So right now, gold is trading at around $2,005 for futures and $1,990 for spot. So I see the maximum downside, which can. So if there is a de-escalation in the geopolitical events which are taking right now, then we may see $50 to $60 of correction on account of that. Any hawkish stance by Federal Reserve or any of the major central banks may cause another $20, $25. So this is the maximum downside. You understand? I'll just try to explain your viewers what has happened. So gold, we saw a surge in US bond yields, and gold prices was trading at 56,500. And nobody knew there's going to be a war between Israel and Hamas. Nobody predicted that. Okay, it's a complete black swan, and suddenly gold is at 56, from 56,500 to 60,000 rupees. So please understand, gold is a strategic investment at this point. It is a must-have. So I don't understand why people do not understand that in this kind of scenario where there is actually a Cold War sort of scenario developing in the world, number one. Number two, there is no clarity on the monetary front for the central bankers, what they are going to do, whether they are going to cut the rates or whether they are going to increase the rates or what they are going to do with the rates. They don't know. Third, if they continue to stay higher for longer, then what will happen to the bond yield? How they are going to service the interest, what they have to pay on the bonds. So it is a complete, I would say a gray area developing on all aspects, on geopolitical, on financial and monetary front. So gold is a strategic investment at this point. So don't worry about a fall of $100, $200, $100, $150. It's a must in your portfolio. And whether people like this level or not, these levels are going to stay for quite a long time.
Sure.
And I'm very bullish.
Done. Totally take your point as well, Kunal. So both the aspects of the same coin, gold prices. But thank you so much, Mr. Chandrasekhar. Thank you so much, Kunal, for joining us in with this discussion on the gold prices. We have a bit of a paucity of time. So viewers, we will quickly take a break on this edition of The Money Show. Don't go anywhere. We'll be right back after this quick break.